This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The International Energy Agency lowered its forecast for 2026 global oil demand growth in its latest monthly oil market report on Thursday, citing the impact of higher prices on consumption. The agency, which advises industrialized countries, implied a surplus of 3.73 million barrels per day in 2026, driven by rising supply from OPEC+ producers and countries outside the group. That was little changed from the 3.69 million barrels of oil per day surplus projected in last month's report.
U.S. crude stocks rose last week as refining and export activity slowed during a winter storm last month, while domestic output started to recover from the freeze, the Energy Information Administration said on Wednesday. Crude inventories rose by 8.5 million barrels, the largest increase in a year, to 428.8 million barrels in the week ended February 6, the AIA said, compared with analysts' expectations in a Reuters poll for a 793,000 barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 1.1 million barrels, the EIA said.
Moving on to the top news in the energy sector.
Saudi Arabia's crude oil exports to China are set to touch a multi-year high in March after the kingdom cut its official selling prices to Asia for a fourth month and attracted more demand, several trade sources said. State oil company Saudi Aramco will ship at least 58 million barrels to China in March, or about 1.87 million barrels per day, a tally of allocations to Chinese refiners from trade sources showed. The allocation volume marks a jump from the previous 2 months, when it stayed under 50 million barrels, and is the highest since October 2022, Reuters records show.
The industry's message was timed to land just before EU leaders gather in a Belgian castle on Thursday for an informal retreat to thrash out a plan for how Europe can compete economically with China and the US. The next 5 years will be the most challenging for Europe's industry in many decades, CEOs gathered in the city of Antwerp said in a written statement. Next, we have the top news in metal markets. Nickel climbed on Thursday, after Indonesia sharply cut this year's mining quota for PT Weda Bay nickel, the world's biggest mine for the critical mineral located in the country. The benchmark 3-month nickel on the London Metal Exchange rose 0.34% to $17,940 a ton as of 0740 GMT. After rising 2.23% on Wednesday.
Gold prices ticked lower on Thursday, after unexpectedly strong U.S. jobs data for January dented hopes for more interest rate cuts from the Federal Reserve in the near term. Spot gold edged 0.3% lower to $5,064.29 per ounce by 10:14 GMT. U.S. gold futures for April delivery lost 0.2% to $5,086.50 per ounce. Spot silver fell 0.7% to $83.47 per ounce, after a 4% climb on Wednesday. Gold eased back from above $5,100 and silver from above $86 after stronger than expected U.S. jobs data tempered expectations of imminent Fed rate cuts, lifting the dollar, said Ole Hansen, head of commodity strategy at Saxo Bank.
We will now look at the top news in the agricultural sector.
China on Thursday reduced tariffs on European Union dairy imports worth over $500 million, in the final ruling of an 18-month anti-dumping investigation started in response to the bloc's duties on Chinese electric vehicles. China will impose tariffs ranging from 7.4% to 11.7% on dairy imports from the EU for a 5-year period, starting on February 13. This is significantly lower than the 21.9% to 42.7% initially imposed in a preliminary decision in December, as stated by China's Ministry of Commerce. On February 3, the EU said it had received China's final calculations for planned anti-subsidy duties on EU dairy products, with definitive tariffs due by February 21. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.